Go for it.
All right. Good afternoon, investors. Welcome to our November 12th. We're a couple of weeks out from Thanksgiving. This edition of Bull Sessions should be some good post-election fun here. My name is Mark Robertson. I am joined by a special guest, Kevin Gologly. Good afternoon,
Hello.
Kevin. How's the weather out there on the East Coast?
Oh, it's awful. It's sunny, clear, and mid-60s.
That sounds tough to take. And Kim, I think I heard mention of another tropical storm. Tell me you didn't.
I haven't even looked. We're going to have a depression come in, and we're going to have now this weekend. We're supposed to have a cold front come in. It could be mid 60s to 70s compared to 85s.
No, that doesn't sound too bad. Let's hope that that storm behaves itself in case we decide to head down to Tampa for Thanksgiving-ish time frame. And last but not least, Matt, is the weather in Houston boring today?
77 and sunny. I'll take fall in Texas, South Texas.
Now, I do have to ask, were you kind of partial to the Lions on Sunday night, or?
Yeah, my son was the only happy fourth grader in class on Monday.
For those,
he actually gave up on it when it was his bedtime.
You corrupted
he
your
gave
poor.
up and had to get a recap before the bus.
Good stuff. All right. Well, the image on your screen, I was going to try to find a good image of Kevin doing his Dire Straits thing with "I Want My TV Back" from the MTV days, for those of you who remember that. And this one came upon me. Kevin has been pressing me to update my media photo, and I thought this came pretty close for both of us, so we'll see. There's been some talk about Ken might want one of these too, so we'll see. Ken is currently traveling. All right, we're going to talk a little bit about preferred stocks a little bit. Going to look at some forecasts, talk a tiny bit about the election. We're not going to go too crazy, but we do want to talk about how to frame our thinking around what is going down right now. It's an interesting moment, no matter which side of the fence you're on, and we'll see what lies ahead. A little bit of Tom Lee and the GRNY portfolio, and so let's go ahead and get underway. Here's a quick look at stuff that really matters. McDonald's is bringing the McRib back. It's been out in a few locations, but they're apparently going with a wider berth on it. And Kevin, is that gonna hurt my Portillo's price?
Yeah, absolutely.
Sean Mace provided this statistic and why it matters to us. The stock market does better when McRib is on the menu at McDonald's. So Ken is out there where he might be able to get access to a Buc-ee's. We'll look forward to a Buc-ee's update. So Ken is tooling away on the road, and we'll try to do our best without him here today. I try not to be superstitious, but it does appear that there's a moment of resistance every time I get up near my cost basis with the Portillo's stock price. I am a shareholder in Portillo's, and there seems to be a stubborn wall of some kind there. And on the upper right, and this is about as political as I'm going to get, and I have permission from Kevin to share this, because on the day of the election, I had tallied up a spreadsheet. We'd actually looked at it a few months ago. We don't spend a lot of time with it, but I had gone out and looked at the most recent polls in all the states and basically said, well, what if it does go that way? And Kevin can prove this. He's got the messages and emails to prove it. I was looking at 312 for Trump, which is where it ultimately ended up. So, Kevin,
I don't remember. This is the first time I've seen this, Mark. I don't know.
Oh, of course it is. But speaking of spreadsheets, now Kevin does a lot of work with campaigns in the state of Maryland, and very familiar with campaigns and helping to get people elected. He had sent me a spreadsheet that he and a bunch of his colleagues used for election night as they're watching the show all night long. And it was thank you, Kevin. I mean, it's just amazing the amount of stuff that you guys get into as you analyze which way the wind's blowing.
Well, it's in many ways, it's a lot like looking at financial reports. Very few people do that before they invest in stocks, but we look at it as a matter of course,
Mhm.
so keep that in mind. It just depends on what level you're all interested in.
So we're going to leave the political commentary from there, but it was a happy coincidence. I did not predict that President Trump would win the popular vote, but I predicted that it would be close. But this is actually after the fact, as you see here. All right. Here's our moment of remembering that Kevin could have invested in McDonald's back in 1969. And
Thanks for this. I appreciate it.
Yeah, I
You had
know.
to realize investing was not buying product. You would have had
Well, and
And
this
I'll have to say that looks like the original franchise McDonald's, which is in Des Plaines, which was right down the street from my orthodontist.
there you go.
I've eaten at that one. It's now just a museum.
You have a McDonald's heritage and 15 cents for a hamburger. Wow. All right, here's our weekly reminder that no investment recommendation is intended. We are going to be talking about real companies. The reason we do this is for the demonstration and illustration of some philosophies, methods, and techniques basically brought to us and to you by the Modern Investment Club movement. Now, whether it's something that we see at Better Investing or as we interpret it at Manifest Investing, our community is basically a whole bunch of long-term investors who love to share ideas and help each other do better and be more successful in long-term investing. That said, please do your own homework before making any investment decision. If we talk about a company that we actually hold in a personal portfolio, we'll try to remember to disclose that. If you'd like copies of the slides, or if you have follow-up questions or suggestions for future topics, our two email addresses, that's Ken and myself, are down there at the bottom of the page. So let's go ahead and keep rolling unless anybody's got anything to add.
Well, Steve Emmerich is letting us know that Portillo's is down 2% today. So you don't have to look at your stock, your broker's statement today, Ken or Mark.
Well, I've had a couple extremely strong days, but I think my entire portfolio was down like 3.8% as we start here today. So not a fun day. All right, here's our quick look. Every week we take a look at the stock market, and in this case we're measuring the stock market by the value line arithmetic average. Those are the green price bars. Those are quarterly bars going all the way back to the turn of the century. And we draw your attention to the fact that this fairly recent surge, keep in mind that we had a couple tough months there in August and September, and that bar on the far right has actually shot up pretty quickly to the point where it's actually above that line of reasonable expectations, that long-term regression through here. So we basically sit back and say, stocks just might be getting a little bit pricey. They're probably not as potentially overvalued as what you hear on TV, but they are definitely less undervalued, if I can put it that way, than they have been in some time. It's been quite a run, and the average stock probably comes in at 8 to 9%. I do predict that value lines lag. We'll draw this number down on the next update. So the golden forecast that you see on the right hand probably comes down and lays up back on top of the red bubble. But any global thoughts on the markets from any of you?
Well, I
Nope.
agree with what Carol says. It's really nice that the markets aren't red or blue, but we just get to look at green.
That's good.
Yeah, I have to say, no down day is fun, but after last week, taking a breather doesn't bother me in least.
Absolutely. All right, so pressing on, here's a quick look at our performance perspectives over time. Again, we do this just to give longer term context. Most of the entries on here are a 10-year trailing situation. I did make an exception for Kevin's Big Mac that goes back to 1969, and that's
Thank you so much. I appreciate that.
It is fifth on this list, Kevin. I mean, in terms of outperformance. In fact, it goes back so far, Kevin, we had to use the Dow Jones instead of the Wilshire 5000 for the benchmark. So good, clean fun. Our two demonstrations, the Tin Cup demonstration portfolio we talked about a couple weeks ago here, continue to perform pretty well. The investing roundtable continues to check in at 17.2, but we're actually losing ground to a red hot stock market right now. We were up around 5, we're now down at 4.2. The company names that you see on here are the 10 most widely followed stocks by our subscribers. And I think we've pointed out that most of us own 4, 5, or 6. Ken, I think, owns 8 of them. So he generally has a smile most of the time.
Only 8? I thought he had all 10 of them.
I think he missed a couple of these. And I do have I wouldn't call it a death in the family, but I did sell my stake in CVS Health recently. Kind of got tired of waiting. To give you some idea how long I held it, it had doubled since I originally bought it, like 25 years ago. So doubling in 25 years, you guys can do the math. That's not real strong, but at least it was a positive gain. Trying to extract something out of it. All right. Here's our Groundhog Challenge. And things are pretty crazy here over the last week. In fact, it was just last week that Ken said those top 10 have been relatively unchanged for a long time. And wow, Marie Frank zooming up from 86th to 5th. You'll notice that I did stretch the list to get down to 44 entries for some strange reason. Wanted to make sure we got Janet Blazer in there.
Well, you could have cut it off at 43, you know.
I wonder who's the first excluded one who could take some kind of grudge against that.
It's probably Herb Lemcool. He hangs out right around there.
Well, and as much as Ken tells you you can't say something,
yeah,
now you blame him for seeing how much upheaval in these numbers were, because I went from what? 10th to 42nd or something?
20 to 28.
You're still in the top 30.
You're still there.
Yeah.
You're at 28.
Well, behind what you see here is a number of people who have owned one or more of the following companies: Palantir, Tesla, or NVIDIA. And anybody that's got big double-digit numbers, that's probably the case. And my portfolio is actually doing pretty well, considering that one of my selections is Ardelyx. So could have been doing better, but I'll take it in terms of the carnage that's going on there. But notice that the average return for the groundhogs has gotten up to almost 21%. And that's up 8% in 1 week for the total contest. So if you don't have one of those 3 companies in there, and no company like Gallagher has up at the top, that satellite company, rocket science, good stuff. All right. The monkey is down to 70 seconds, so we can all breathe easier.
Did you alert Ken to that? I'm sure he was really eager to hear about that.
He's worried about the monkey. All right, so the other day we were sitting around talking about preferred stock in one of our sidebar sessions, and this came across my email, and then in the manifest forum, the leader of the Groundhog Challenge, that's why he's the happy groundhog there, Jim Gallagher, shared that he had bought a preferred stock from Ozark, and then also MGPI, which probably checks out pretty good. I know that MGPI has showed up in a number of our screens here fairly recently, so I think this is a good nudge for us to go ahead and talk about preferred. Now, I had never bought one. How about you guys? Have any of you guys bought any preferred shares over the past few decades?
No.
Not me.
Nope, I haven't. Unexplored territory.
It's not something that I've really thought about all that much. And this is the definitions on the right from Investopedia. You can get to the link down at the bottom of the page. But the way to think about preferred stock, again, the underlying company is important. And it's basically a special class of stock, which generally pays a slightly higher dividend. And my experience has been, or at least my understanding has been that the stock prices are a little more stable over time. So Jim is basically dragging us into a closer look at preferred stock. Right. So I actually went out and said, first of all, the first thing I discovered, I couldn't buy it at Robinhood. They do not support the purchase of the preferred stock. So I basically went over to what used to be known as E-Trade, and now it's Morgan Stanley. And then when I entered OZK here, it actually gave me the one that Jim has mentioned as an option. And you can see that it mentions that it's got a yield of 4.625% for that particular class of preferred shares. I have to believe that the amount of volume is probably important. In some cases, you might have to be careful with small companies and maybe limit orders instead of market orders, but I just did a market order, really nothing to it. This is actually the capital structure box from Value Line that confirms the existence of the preferred stock. And again, the thing that is probably one of the predominant characteristics is that the common stock has a dividend yield of 3.25, and this particular preferred is basically 1.5% higher. So we'll see how it works out over time. And here's a question perhaps for the audience. Matt brought it up as a possible issue. Are there any accounting issues or tax related issues with a preferred that I am not anticipating? So answer in the questions tab. Matt, did you get a chance to look into that at all, or?
So Microsoft Copilot says that they give 6 reasons to the answer why should an individual investor not buy preferred stock. One is price sensitivity to interest rates, because you're primarily looking at the dividend as opposed to growth of capital. They also talk about lower voting rights. A call risk, I was just starting to look up and see if this was callable or not. I'm not sure if you know, but the tax consideration says, while preferred stock dividends are often taxed at a lower rate than bond interest, meaning long-term capital gains, they are not always qualified for the lower tax rate on long-term capital gains. So it's not that it isn't qualified, it may not be qualified. That's where my searching has ended so far. Okay.
So there are considerations. Please call me if you discover that I'm going to jail for some reason, or if I've forgotten to do something. But no, pretty decent situation. Kimber actually reached out to one of our bank examiners, and he said, I like the topic, just not quite as warmed up to Bank of the Ozarks. And he recommended perhaps a look at this one, which is one that Ken just brought up during the small company search. Any other background on that, Kim?
No, I think he just said that it had run up in price though.
Mm-hmm.
So, but
At least it's still got 3 stars.
Yeah.
Yeah, and the thing that I notice here is something that I would be more inclined to expect. This has about a 1% yield on the common stock, and this one is a 7.2. So definitely a little bit different flavor. Might be worth just watching. Maybe I'll buy one of those and put them side by side. I don't know, but pretty straightforward. The main thing is it was very easy to do the transaction. Probably depends on the brokerage firm, and it'll be interesting to watch. Here is the characteristic that I was just talking about. The underlying bank, Ozark, the price chart on the bottom is a 3-year look back. And what you see here is basically a 60% variation between the minimum and maximum prices over time. When you compare the preferred issue, it's generally going to be less volatile. And that's one of the selling points that you hear about on the commercials or people who are pushing this sort of thing. And this one certainly checks out along those lines. You very, very much a dampened down volatility compared to the underlying stock. Now, in order to do a study on one of these using our tools, using an SSG-based stock study, you would have to replace the stock price history. to generate a preferred PE. And you'd also want to have that higher projected yield in your Section 5 total return calculation. Anything I'm forgetting there, guys?
I'm at my outer limits right now. So you did great.
Okay.
I will say Investopedia notes that where the trust preferreds issued by banks may not be treated as qualified dividends, but your broker should be able to tell you.
All right. So if it needs to not be in my IRA, I need to know that soon.
Mhm.
Okay. All right. Here's
Well,
a quick.
IRA might be the place to do it. I don't know if it comes into the issues like partnerships is what I was talking about before,
Right.
where that could, if the partnership made too much, it may induce your IRA to actually file a tax return and pay taxes. But I mean, bonds are generally a good place to play in your IRA because you're going to pay income tax on all that anyway.
Right.
It's kind of a waste for dividends. So that might actually be the best place for it.
That was my first instinct. It's not always right, but we'll see. Here's a quick look at an ETF, an exchange traded fund that focuses on this type of thing. Again, as a source of ideas for potential investments, it might be a place to turn to. You can see the various preferred issues, their top 10 on the right there, and then you see a little bit of performance track record. You know, and the one really nasty year is when the interest rates took off and went up. Other than that, you are looking at a fairly decent, steady investment that I would expect upper single digits over the longer term, maybe low double digits, be fairly reasonable. And then this one again, for those of you who want to dig in a little bit deeper and perhaps, it is a fit for your personal situation. Kiplinger provided this list of 5 exchange traded funds. Yeah, they're all ETFs on this list. And again, could be a place to hunt down some ideas, or it could be a way to invest in them directly if it makes sense for you.
2 final points back to OZKAP. Now looking at Schwab.
Okay.
One other point, and I glossed over it, but Copilot brought this up. These preferreds are callable at $25. The next call date is November 15th, 2026. So in that sense, you can cap the value, particularly if you're buying them for yield into a lowering yield rate, which would increase their price like a bond.
So you're saying, so if, when this hits 25, the company can basically close it out on you, call it.
That's what it says.
Okay. I'd be okay with that.
Yeah, it just caps it out, right? Someone's got a call option on you. And according to Schwab, unfortunately, the qualified tax status is unknown. That's not
Well, no, nobody recommend this for an investment club then at any point in time. We don't want to cause any.
Schwab, they're a feisty up and coming broker. They don't have all the data.
Okay. All right. So moving on from there, here's a quick look at a comment this week from Jesse. And it's the type of comment that you see fairly often about PE ratios are a mess right now, especially for some of the Magnificent Seven. And I love the quote from Michael Batnick up at the top, because we really don't pay a whole lot of attention to market cap. It is inherent or implied in what we do, but we basically pay attention to the return forecast and the quality. And then, of course, Mr. Buffett stating the obvious there. It is something that we've always been fascinated by. We used to have some fairly extensive discussions about this on the Better Investing magazine staff. But the thing that I wanted to point out was down here on the lower right. It's basically taking that same group of companies and illustrating the projected annual return that you get from a SSG in your Section 5 right next door to the projected return on value, which again is a very similar calculation, but it doesn't use the PEs at all. And what this might be the answer to, is it time to run for the hills with any of these? I don't think so. And then most of us believe that there's a fair amount of opportunity right now in some of these. And the two return forecasts side by side bear that out, including this one, which has taken some heat lately. So I think most of us are not terribly concerned about the PEs on the left, taking a step back from the trees. And this is something that takes some getting used to. But we have fairly decent expectations for those companies I've highlighted on the right. Any thoughts? Kevin, you had mentioned that you were.
Yeah.
Go ahead.
Yeah, the four that you highlighted there, Amazon, Microsoft, Meta, and Alphabet. Again, looking at the projected annual return, those are all about the historic average. If we say it's about 9.7, they're all pretty darn close, and they're the ones that are the beaten down ones.
Yeah.
Which tells me, if anything, this could be maybe even a buy signal if you do your reading and understanding that there could be something going on there. You could even roll in NVIDIA, who's right near them with theirs. But all of them look pretty good. I own of the group that you highlighted, I own 3 of them, and I ain't selling them. I'm going to be like Leonardo DiCaprio in Wolf of Wall Street. I ain't leaving. I'll have to bring in the SWAT team.
Future's fine.
It's the point where my par is 7.9%, right? So those look normal in the long-term thinking, but relative to the rest of the market, it has a couple points extra potential.
Yeah, and that backs up a lot of people will actually start an argument over NVIDIA that it's time to sell it because it's got a PE with here 63.4. So we see it basically through that lens a little bit, and it's not as nearly as overbought as some would believe it to be. So keep it simple, and again, I think Nicholson's rule on being slow to sell a double-digit grower also comes into play here, if there are any notions of selling. So use the slide as you see fit with your investment club partners.
Well, I like the way you and the roundtable do it, is that you won't sell anything until it gets down to close to money market return rates. And I think that's a good benchmark so that people don't get out of stuff too soon.
Yep. All right, so we thought we'd spend a moment talking a little bit about the election, and there's a bumper crop right now of this type of stuff out there, and they are a source of ideas from my perspective. Jefferies is out with a bunch of stuff. Goldman Sachs is out with basically trying to get their crystal ball out and mine or pan for opportunities. And my reaction to this kind of stuff, if I can nutshell it, is it's just like screening results. It's a place to start. It's certainly not an end to the hunt. And you can see, here's one of the issues very close to home here in the Michigan, Detroit area. What's going to go on in that industry based on some of the stuff that was put forth during the campaign phase. And Goldman Sachs is also trying to foresee the future here a little bit. What's your reaction to this type of content, Kevin?
I like it in that it gives me a different perspective than what I have in my professional life. So I see things through a different perspective. The only problem I have with them is that I feel like this is in many ways noise masquerading as news. Is that they're always telling you what's going to be up in the next 6 months or a year or what have you. And I find that if you're a long-term investor, this stuff is mostly noise. But like you, and we talked about this beforehand, is I think the way Ken Kavula talked about it, with when you start seeing the same companies showing up both in screens and in these stories and the like, then you go like, okay, maybe it's time for me to investigate. Because where I may not necessarily look at the stuff like Jefferies, even though they're highly credible with very, very smart people there, I run into the same hook. Anytime I go through my Yahoo finance feed and I see something from Motley Fool, I'll immediately read it. I don't always, say, yes, I agree with it. So I think the Jeffrey stuff, it has some utility because, again, it gives, I think, a different perspective. But who's to say what actually gets through, because he doesn't really have a formal policy, even though they have the 2025 and they have this agenda policy, because he can change his opinion and move from it. And that's just the way he operates. And he's been, successful enough to be elected twice.
Mm-hmm.
So he's going to do what he's going to do. And I'm looking for something that goes beyond just the single term of a presidency. Is my outlook. So I want something that's going to sustain no matter who won last week.
Yeah, that's a good outlook, and in fact, it's a good segue into some of the stuff that we'll look at. One of the other reactions that I have to content like that, and again, nothing against Goldman Sachs or anybody else that puts out this type of stuff, but in the time that they were writing their features, Tesla went from 240 to 360. So while you and I were reading their report, it went up 50%. And I'm not making this up. The numbers are right here. And in fact, that's where some of the groundhogs have benefited in the standings. And I would also point out this is kind of a cool chart because here's that relative strength index the last time it got this high. Notice that this is not that much lower than where it is today. So you had this multi-month period where it basically was chugging along at less than 270 after hitting that high. We'll notice that we are back at, maybe you want to take a step back, moments. Now, if anybody out there wants to sell me their Tesla at 200, I'm interested.
You're that kind of a generous guy. I see that. Yes.
Little arbitrage. So that's kind of a telling chart. I found it kind of interesting. All right, and here is one other perspective, and it's I'm not trying to pick on anybody. This is something that we did back in 2016. It had to do with the Goldman Sachs. They issue their 40 top buys for the year, their high conviction list. That's on this side of the ledger here. Again, don't read the whole thing. You can actually get to the entire article right here if you so choose. And at the same time, they basically make a list of 40 companies that they might be most likely to short or bet against. And then so we noted them, wrote them down, came back a year later, and 1 year is a tough amount of time. This is a true statement. It takes time to really generate results. I might go back and look at a 5-year chart on these at some point. But the thing we found fascinating was their 40 most positive, highest conviction companies actually generated -6%. They were supposed to do 29%. And the companies they hated at the time were supposed to go down 19. They actually almost broke even at -2. So the only reason I point this out is, again, coming back to that statement made, generally take something like this as a nudge for further study and not really a recommendation of any kind other than to go put it through the gauntlet, do your own study, make your own decisions. And again, nothing against Goldman Sachs, but wow, this is kind of a sobering result at best.
I think I ought to start shorting it the next time they do this story.
I'll tell you, it gets to be kind of a murky issue. Anytime you're dealing with information like their high conviction list, if it's been out for any number of days, there's already been movement in the price, so you really are truly performance chasing at some point. So maybe it worked for 2 weeks and then didn't work for the rest of the year. I don't know. All right. So here's one in honor of Matt Spielman's longer term emphasis on investing and how to think about it. A little philosophical, but behavior is important and understanding this stuff. And I think the great humiliator stuff is one way to think about everything. Like I've had 3 or 4 really, really good days in a row, and I'm getting my dose of humility here today. I think it's a double helping. So the market can misbehave like that. And then this of course, is, we talk about this one all the time. The world is not ending, and if it is, you don't need to worry about the value of your stock investing portfolio. Your thoughts, Matt?
Yeah, I thought there was a great article around 2022 in the point of the Russian invasion talking about, essentially ignore nuclear threats, and that's exactly it, because you won't be logging into your broker. But I really like John Templeton's quote, very much like Warren
I
Buffett's.
think we lost you, Matt.
Oh, he's back for me.
I can hear you. I can hear you.
Sorry. Okay. But the Templeton quote, very much like Warren Buffett's.
Anybody else there?
Yeah,
I can hear you.
I think we lost. Okay.
No, you're good on my end, Matt.
All right.
Kim, can you hear me?
I can hear everyone.
I think she may have lost all of us.
All right.
Yeah.
Go ahead, Matt.
Yeah. So it very much like Buffett's, be fearful when others are greedy and greedy when others are fearful, essentially. That it's
exactly.
this endeavor can be lonely because you need to be somewhat contrary. Otherwise you are chasing performance or following the herd. You have to be not afraid to disagree in some way with others and disagree without being disagreeable. I find this group in particular, but all of this BI group interesting because disagreements are accepted as opposed to, let's say, certain other realms of discussion. We regularly disagree, and of course, even if you don't speak out, no one makes you buy anybody else's suggestion. So it's a very interesting dynamic that's different than polite society or other topics like politics.
I could have used you at a recent club meeting, a visit that I made, where one of the partners was extremely adverse to Lululemon, and it was interesting, and not the first time we've seen that type of thing.
Sure.
Well, we ought to, if we're going to talk about investment clubs, we ought to talk to the person who's in 50 investment clubs. He just joined us in the back room here.
It's not 50. I don't think he's ever.
Oh, is it 60? Is he up to 60 of them now?
How are you, sir?
He's self-muted. There he is.
Awfully tired, but we just checked into our motel room. I'm getting ready for our investment club meeting this evening for BI Bakers. So I thought I'd check in and see what you jokers were doing.
Well, your name has come up in vain a few times, but we don't need to dwell on that.
We're still joking around, Ken. You can't expect anything different.
All right.
When the teacher's away, the students will play.
Absolutely. And here is kind of, well, I'm not sure how this one got in there, but sometimes the arguments actually are revolving around this. Now, most of us here have a very, very long time horizon, so pretty much all the same. But every once in a while, you'll find a situation where a person definitely has a different time horizon. So that can frame the situation completely differently. And also JC checked in on Gallagher's stock, so I thought I would show this. This is basically how he sprung ahead in the groundhog contest with that ASTS. And there's a groundhog on the right that's obviously not missing too many meals.
It's like ASTS has achieved orbit, the stock as well as the product.
Absolutely. And hopefully they'll stay there for Mr. Gallagher. All right. So I just kind of wanted to wrap up this conversation. You guys have already said it. If you're doing this, again, you treat the analyst recommendations and literature discussions that come across, same is true with Tom Lee, as just a piece of information and perhaps a nudge, very much like a screening result. And That's very true. And you basically treat them with this long-term perspective that we all share. But what I think is also very true, and you have to keep this in mind, that our attitude is you really don't do anything different. You go out there and you find better companies selling at better prices. And what I would point out is this stuff, and I barely even know how to read the chart other than to say that expectations do change and are continuously updating. And the numbers that you see here, for in this case Palantir, but it could be anybody, are going to show up here, and they're going to be going up. And the same is true on the sales. I could have put the sales up here. So again, keep in mind that these are continuously adjusting. Sometimes they adjust more than we would like them to. We ran into that with NVIDIA and a tremendous barrage of uncertainty a few months ago. But in general, and again, keeping that long-term perspective, just know that as we go through and do our studies, that this is a reality, that these numbers are updating. And when you embed the analyst estimates on your SSGs from the online tools, same thing is true. You're basically looking forward and giving that not undue influence, but an appropriate amount of attention in the course of your studies. Any thoughts or comments?
Nope.
Nope.
Okay. All right. I don't know if you're anywhere near South Carolina, Ken, but you want to avoid any monkeys that you see running along the highway. And I think it's particularly interesting that we've been making this warning for a few weeks, and then this news actually comes to life on the right. Wild stuff. Now, I'm not suggesting that we change from red rabbits to monkeys. And Ken, you're not supposed to be here, so look the other way for a minute. Here's how our best small companies are doing only a couple weeks into the contest, or into the best small companies for this year. And I would say we have a pretty good launch over the last several days. Now, Ken, I don't know if you caught it, but Technoglass is having a little bit of a rough day. But those are pretty good from top to bottom. And of course, our dear friend down here at the bottom is kicking up its heels and misbehaving a little bit here lately. But we are off to a decent start. Any thoughts? Other than Ken telling me that I shouldn't do this.
I would say, next year you probably shouldn't have Ardelyx on the best small company, because in that way it will go up.
Oh,
That's my recommendation.
Well, you'd be seconded by a few other people here, but I would point out that the audience selected Ardelyx last year for the best small company list. And
You only gave us 2 choices. Come on.
True. They had 2 choices.
Ardelyx or more Ardelyx. Yes, those were the 2 choices.
Yeah, would have been the good ones. All right. Let's talk a little bit about Tom Lee and put up the CNBC side for Ken to make him comfortable. Tom Lee has been on CNBC a lot lately. And Matt pointed out that he has launched his own new exchange traded fund. It'll be kind of fascinating to watch. And he continues to have a pretty high opinion about the potential embedded in small company stocks. But what are your thoughts on the ETF, Matt?
well, yeah, it's a mixed bag. I mean, I love the name. I said maybe that's the counterpoint to best small companies, is we have just the ones of, if your connotation of granny shot is something easy to make, something everyone should do. Maybe you think that's like betting on Microsoft or NVIDIA as an AI play, right? Everybody knows it. There's no surprises. If you dig a little deeper, and he does post, there's a number of documents posted on the fund's website, which is grannyshots.com. There are actually, how many are there? 1, 2, 3, 4, 5, 6, 7 different themes. The reason that they're granny shots, long story short, is he has 7 different themes that he thinks are going to be important in the foreseeable future, and he's looking for companies that are involved in the maximum number of them. So the most is Meta actually has 5 of his total themes. There's a seasonality. I don't know if that's a theme, but you can dig into it and see what he defines by that. The rise of millennials and their spending power, labor supply, and easing financial conditions are the check boxes they hit, and they don't hit PMI recovery or energy and cybersecurity. So it's just interesting. He's being very transparent with his approach. He is posting trades. I don't know if it's daily trades like Kathy Wood, but it is something more than his SEC requirements. And he's been upfront with how he's approaching it. There's a lot of very recognizable tech names there, of course. There are a few banks because he's talking about easing money, right, lowering interest rates. There were a few other like Caterpillar's on there is old industry. Granger is on there. So there are a few other things that aren't just just another technology fund items. So I guess we'll see how it goes, and I'm interested to see what he does with it when some of these have played out. Right?
Exactly.
Does he have a different 7 and 6 months, or are these things, to our prior discussion, really lasting? He does split them into longer term and shorter term themes. Really interesting to see what sort of turnover or tracking of his thinking goes on. That would be the most interesting to me.
Yeah, so you are looking at kind of the seeding of the original portfolio here. You'll notice that all of these are November 7th. But what I would point out to everybody is that when changes are made to the portfolio, those are literally posted within a days, if not maybe a couple of weeks. So you're going to be able to see anytime he has enough belief in an opportunity, it'll show up here. I do hope that, or would wish that there would be a smaller company option also somehow involved. And like Matt said, you can follow him on social media to get some of those. But I do think it'll be interesting to watch this one. The other thing I would point out, and Robin Hamilton has a question about, just the opportunities available with the electrification and the grid. Look at the number of electric type companies that show up on here. And you can actually throw some of the computer type companies into that mix. And this does in some ways resemble our electrification portfolio that's out there also. We'll be taking a closer look at that here shortly.
Yeah, the theme is strange because literally it's one theme that says energy/cybersecurity.
Mm-hmm.
Obviously, it's kind of a mashup of all things to support the rise of more data centers and more online use. But it's interesting just the fact that he has them put together.
So, Mark, I have 2 comments to make about this particular shot here. Usually, when we look at the top 2/3 of a fund, we're looking at the big players in the fund, and I think people have to be aware that this is 60% of the portfolio, approximately.
Yeah, about 20.
But the other 40% are all probably equally weighted or very close to the 3% as well. So the entire portfolio probably should be viewed before you make an assumption about what the quality is or what might be going on with the whole thing.
Mm-hmm.
This is not, it hasn't had a chance to do any maturation yet, to sit in the bottle like a fine bottle of wine or anything. It just has been stuffed in at the moment. The other thing, I'm very interested that the Motley Fool has just given us a recommendation also on a company that is an old-timey called EMCOR, EMCOR, ticker EME, and they're really pushing it hard as an AI play as well. Mm-hmm. And I don't see that on Tom Lee's list here at all.
Yeah, it's not in the full list either. There are 30, to your point, Ken, there are 34 stocks in total. To the point about maturation, the lowest holding is actually Booking at 2.41% is the smallest holding.
Okay. All right, so it'll be interesting to watch. The important thing is you can be aware anytime that Tom Lee has something new on his of interest list. Well, Ken, here is the Buttonwood portfolio. It's actually prospering pretty well. I think it was up $200 yesterday. Probably not so much true today, but we will be taking a closer look at this one a week from now. The companies that have been mentioned for a closer look are Diageo, just with the slightly lower growth rate and some of the pressures that have been going on. Kevin, you're welcome to come back and tell us about Brown-Forman and all the stuff you talked about with adult beverages at your most recent session, digging into
digging into the BI. Yeah, we had Brown and Forman was the undervalued feature. I haven't looked at Diageo. That may be a good, that is a perfect counterpoint to him.
Well, there's some cultural stuff going on for sure. I mean, we've seen it with Sam Adams and a variety of things. And then Ken had also mentioned maybe take a closer look at Vertra to make sure that we think they are competing effectively against what is a formidable number of competitors and the stuff that they do. So, any other thoughts on for next week's Buttonwood?
If we're going to treat this as a real portfolio for the same way that a club might treat it or that an individual might treat it, I really do think we have to look at the 4 that are in single-digit par values right now too. They might be really high-quality companies, but if they don't have a couple of other things going for them, they're not contributing to our overall par. And if we don't keep that par up, around 13, 14, we're never going to meet some of the goals we've set for this portfolio.
Yeah, and Matt would be the first to tell you, Ken, that Luminar is up about 20% in the last week. So
I own it. I know what it does.
Headed in the right direction. To the
There we
moon.
go.
To the moon. All right. So with that, here's your weekly reminder that we do archive all of these sessions under Manifest Investing on YouTube. And you can find, there's our best small companies from Halloween-ish timeframe. The roundtables and bull sessions are archived here also. If you want to go back and take a look at how we hunted down our best small company list, all of those sessions are on the page right now. For coming attractions, again, the Buttonwood thing will probably be next week. At some point, we may take a look at some of our favorite podcasts. And also that book on the right is a fairly interesting book that we may drag that into a more comprehensive discussion about how investing fits into an overall family wealth plan. And the other thing that I do want to initiate a bit of a conversation on is a number of emails I've gotten on what about the possibility of doing something along the lines of a boot camp, talking about some of the features at Manifest and just simply long-term analysis and portfolio management. So I will be reaching out under that theme for your thoughts as to what we might do or what you would want to see.
Mark, I think it's fair for us to say also that we've been frustrated when we've done these boot camp kind of things before because people ask for them and they say they have a lot of questions, but when we ask for questions, we don't get the quality or a lot of times even the quantity of questions that warrants the time put into a boot camp. So if you have questions about Manifest and if you'd like us to do some programs on that, you need to ask those questions. It doesn't take long to drop an email to Mark or to me and tell us what's bothering you or what you'd like to see or why does something work the way it works. Those are good questions for us to leap off of and do programs on.
Yeah, and I'll just second that notion. I mean, just last week we went through a handful of questions that can very often lead us into very helpful or provocative or just simply very supportive areas for further discussion. And it's just a good thing to let questions kind of drive things a little bit. And we're certainly not afraid of that sort of thing. So one of our
Mark, Steve has his hand up in the air and he says he has a technical issue and I'm going to unmute him and let him talk to you. Steve, you're muted on your end. You're going to have to unmute on your end. There we go.
All right, thank you. I am watching the webinar and I accidentally scrolled with my scroll wheel on my mouse.
Oh,
and
no.
I can't get it reduced down to the normal size. It goes down to, I think, 50%, but I don't know. I know there's got to be a way for this to correct that problem.
I think try
Steve, if you,
holding.
I was just say, go up into the Zoom. You see up at the top where you see who's talking, me, then
Yep.
the webcam, and then
Yep.
Zoom. Zoom has a drop-down window, and go fit to scale.
Yeah, I put that back to 50%.
No, do this
Another
drop-down window. There's a drop-down window, and
Yeah,
there's one that says fit to scale. Try that.
that did it. Thank you. I've done it before, and I'll do it again.
There you go.
Thank you very much. Appreciate
You're most
it,
welcome.
Kevin.
So
You're a
again,
fine son.
looking to kind of steer that towards what you guys would want to see. And you're not bashful and you ask great questions. So we just invite you to do that. Here, we'll just leave it at this point. There is a reason for optimism between the actual election, day of the election, and the end of the year for that quotation from the Motley Fool. And perhaps in celebration of the Rocky Mountain chapter, Betsy Wills, Ralph Futch, and others. That image on the right, that looks like a bear looking for a place to take a nap. Let's hope he does. And Ken, you missed the early part of the conversation, but we're having a tug of war over who can be Statler and what's the other guy's name?
Waldorf.
Waldorf.
Well, you're taller
And,
than I am, so you be the tall one, I'll be the short one.
I defer
you got
to
him
Matt.
wrong. Actually, Waldorf is the shorter one on the left, and Statler is the one on the right.
All right.
Well, I'll be the guy with the
Thanks to
white hair, since
Wikipedia.
that's the color of my normal hair, so, you know.
Well, you know,
Well-
Kevin was insisting that we stop using old media photos, so I found something as close as I could to be currently accurate. So enough on that. All right, anything else, guys? We need to kick around?
One final fact look up. Fidelity is more definitive than Schwab. It says OZKAP's dividends are not qualified.
Okay, so now we have to have a discussion on what that means to Mark and the rest of the investing world
Mm-hmm.
next time we gather. All right. And let's hope this works out better than the last time. Then Ken and I were wheeling along on the way to Cincinnati for the national convention, and I wanted to show that it was possible to invest in VIX while we were rolling down the highway. And I was actually trying to demonstrate that, you know, I could be right on it and make some money. I was right about it, but I didn't make any money, so it irritates me. Still irritated by that, Ken. All right, anything
And have you
else?
bought any Buckies? Have you bought any Buckies instead?
Oh,
Bucky's
you can't.
not publicly traded yet, Kevin.
You should be on the inside with those folks.
We have people watching it very closely, along with Torchies. Torchies is also on the short list. And Ken, did you drive by any Bucky's on the way there and back?
We flew, we're in Virginia and we flew today, so we didn't
Okay.
drive by any Bucky's, no.
So
We did drive by a really big sign outside Detroit Airport that announced the opening of a new Portillo's right by the airport, the Detroit Airport.
Yes. Good stuff. All right, so with that, we'll sign off for another week. Let us know if you have anything on your mind or if you have any questions. And everybody get out there and enjoy. And I would really appreciate some price support on our Delics if you get a chance. Right.
Shameless, shameless.
Take care out there, everybody.
Good afternoon, all.